NIO CEO just revealed this officially about short seller claims. If you're interested in stock market or investing or any sort of stock related activity, you have come to the right spot. We've got for you all the latest updates regarding NIO stock, and today again we've got some more. So welcome back to Stock Market News. We've got all you need. Without wasting any more time, let's get into this video ASAP. Hey, please make sure you hit that bell icon too, and subscribe to our channel so you get every single one of our updates. And let's begin. First, we have to begin with a little bit of history. Following a short seller assault, NIO shares have been trading lower this week. When a short seller claims that a corporation is engaged in illegal activity of any kind, it is common for the stock price to drop. In the case of NIO, Grizzly Research claims that the electric vehicle manufacturer engaged in an audacious scheme to artificially inflate its revenue and profitability, going so far as to compare it to the scandal involving Valeant Pharmaceuticals, which involved the company being found guilty of engaging in related party transactions in order to increase sales. The fact that the third party that Grizzly Research is referring to is connected to NIO's successful battery program constitutes a significant advantage over the company's competitors. It goes without saying that investors are concerned. NIO stock dropped over 11% on both the Hong Kong and Singapore stock exchanges on Wednesday, while it opened the U.S. market deep in the red before recovering to a dip of approximately 2%. Today, the stock has ticked up slightly. What you, as an investor in NIO, need to understand about this onslaught by short sellers is the following. The allegations made by short sellers, Grizzly Research accused NIO, in a detailed analysis that was published on June 28th, of utilizing its affiliate Wuhan Winging to inflate its numbers and frequently outperform Wall Street predictions. Grizzly Research's allegations were made public. One of the most alluring aspects of NIO's business model is the company's Battery as a Service, or BaaS program, which enables users to buy NIO vehicles at a reduced cost if they do not include battery packs and instead pay to rent and change batteries as needed. The issue is that Wuning leases the batteries, not NIO, and this is where things get interesting. Therefore, each time NIO sells a car to Wuning through its BaaS program, the company also sells Wuning battery packs and gets money from those sales. Customers of Wuning's BaaS product pay subscription fees, which the company then pockets. According to Grizzly Research, its investigators in China discovered that NIO had oversupplied Wuning with battery packs in order to artificially boost Wuning's earnings. The researcher estimates that NIO oversupplied more than 21,000 batteries worth more than 1.1 billion Chinese yuan based on Wuning's inventory as of September 30th, 2021. This estimate's based on the fact that NIO had oversupplied. According to Grizzly Research, this may have increased NIO's revenue by 10% and underestimated the company's net loss by around 50%, meaning it should have been approximately 95% greater for those 9 months. To put this into context, NIO claimed that its revenue for the entire year of 2021 increased by 122% to 36 billion Chinese yuan, or approximately 5.7 billion US dollars, while its net loss decreased by 24%. Grizzly Research is also concerned about the rationale behind NIO's decision to immediately recognize income from the sale of a battery pack to Wuning, rather than spreading the revenue out over the approximately 7-year subscription period for BaaS. It warns that some of the company's arrangements with the Chinese government could materially dilute shareholder wealth in the future, and that NIO is using connections between its executives and Wuning's executives to pull off these accounting games. The remark from NIO offers an opportunity for further discussion. As was to be expected, NIO has responded to the findings presented by the short seller by stating that the study contains many inaccuracies, unsupported guesses, and misleading conclusions and interpretations about information pertaining to the company. However, what I also anticipated from NIO was a more in-depth statement describing its connection and agreement with Wuning, which in particular has a direct influence on the EV manufacturer's bottom line. NIO, on the other hand, has stated that it is looking into the allegations and that it would make appropriate additional disclosures in accordance with the requirements of the regulatory authorities in the United States, Hong Kong, and Singapore. Does this imply that you should immediately start selling your NIO stock? Investing in the shares of a foreign company carries with it a certain amount of inherent risk. Having said that, NIO is listed on 3 different stock exchanges throughout the world. Consequently, it is required to comply with a greater number of regulatory requirements than most other businesses. In Europe, NIO not only sells vehicles, but also provides BaaS to its customers. Additionally, NIO only owns a 19.8% share in Wuning, hence any business dealings with Wuning that directly influence the inventory and bottom line of the battery company would also harm other stakeholders, who include some of the most significant battery manufacturers in China. In addition, the sale of vehicles accounted for approximately $5.2 billion of NIO's total income of around $5.7 billion in the preceding fiscal year. The sale of battery packs contributed just some of the total revenue that was brought in. In point of fact, about 55% came from the sale of chargers, energy and service packages, battery upgrade services, and automobile regulatory credits. Further, Grizzly Research's calculation of NIO inflating net income by 95% appears to be based entirely on its views that NIO itself, and not Weening, should lease batteries and consequently recognize revenue and depreciation from battery sales over the course of the BAAS subscription period and not up front. This is because Grizzly Research believes that NIO should lease those batteries. It also assumes that Weening should have the same number of batteries in inventory as the number of BAAS customers. This assumption is based largely on two things: a conversation that its investigators had with one NIO salesman and the low footfall that was observed at some of the NIO battery swapping stations. According to the findings of the Grizzly study report, NIO has curiously outperformed estimates since founding Weening. In addition, it was stated that Weening is suspected of inflating NIO's revenue by around 10%, while also inflating NIO's net profits by 95%. According to the analysis, this associated party is likely responsible for at least 60% of the earnings that will be generated by the company in 2021. NIO, in response to Grizzly's allegations, stated that the article in question is without merit and comprises a multitude of inaccuracies, unsubstantiated hypotheses, and misleading conclusions and interpretations. NIO has stated that it will make additional disclosures in accordance with the requirements of the stock exchanges in both the United States and Hong Kong. Additionally, the company has stated that the company's board of directors, including the audit committee, is reviewing the allegations and considering the appropriate course of action to protect the interest of all shareholders. The takeaway here is that you ought to view reports from short sellers with a healthy dose of skepticism. Although you should keep an eye out for any further disclosures that NIO may make in the future, the company's expansion goals appear to be promising, and there's no reason to sell the stock at this time. NIO Inc. has refuted the allegations made by a short seller that the company has exaggerated its financial performance by stating that the report has many inaccuracies. NIO is accused by Grizzly Research of using a linked firm that sells batteries to artificially inflate its revenue and net income by around 10 and 95% respectively. Grizzly Research made these claims in that report. And that's it for today's video, guys. We sincerely hope you enjoyed it. And if you did, please make sure you give it a like and share it with all your friends and family. Remember that this channel is not intended to provide financial advice. We do not advise you to invest in any company. Let us know if you have any questions or comments in the section down below. And make sure you also subscribe to our YouTube channel, where you'll see even more of our incredible videos. You can also watch our other videos that have been specially selected just for you. We thank you for spending time out of your day to hang out with us on our channel, and we look forward to seeing you in our next video. Thanks for watching, and have a great day.